The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the last day of the month, July the 31st. When you get to the 31st, you expect another month to start, and August will be coming up. Wow. Isn't that amazing? More than half the year's gone. But most importantly, we will be getting the monthly charts at the close today. And that is going to be really important. Now, what I've been talking about, patterns repeat over and over and over. Even more important than patterns repeating over and over, there are sometimes moments when the technicals are pointing to a certain a period of strength that is unfolding or weakness, and the price has not yet reflected that. So when I show this chart right here, this is on the left side. Well, first of all, let me just run down the numbers. Thank you, Steve, for a great 2 hours. Today being Wednesday, you've got Larry Pesavento coming up after me. You've got Darryl Martin. You've got Dave White. Then you've got Tom O'Brien wrapping up at 4 o'clock till 6. Just fabulous program all the way through. Now, let's go through the numbers. The Dow is up 91 at 15,611, having made a new recovery high, but it also happens to be a new all-time high. The S&P is at 1695, up 9, almost 10, also making all-time highs. That's important. Why? Because yesterday the Qs, the NASDAQ triple Qs, that's the Index 100, made a leg C. I cannot call it anything else but a leg C, and the implication there is that we don't have to go very much higher, but there should be a leg D to culminate it, because that's what you expect in the Chapman wave. Now, the one missing ingredient is the ESU, which is the 13. That's the September S&P contract that you can see right here. I've got an alternate count, and I believe I'm going to have to use that. I've got just a fraction of 25-cent difference between the high of the 27th of June at 1614.25 and the next day, 1614.50. I said that this could turn out to be a phantom peak A, Chapman wave phantom peak A. I don't want to get into the difficulty of assessing it here, because this is really something, because the futures are trading 25 cents. There's a little leeway that I can have, but it's a legitimate way of looking at the chart. Why? Because if you look at the internals, you will find that that 25-cent difference also coincided with a shorter term time frame that would have said, yeah, we could very well have made a peak there. Therefore, I prefer to be ahead in the Chapman wave than behind. I'd rather be talking about this as being peak C going to leg D at 1695.75 than to be negative. That's number one. Number two is that pattern that I've talked about. Remember the falling axe in the Chapman wave methodology, that pattern that I've referred to over and over. Well, there was a little mini one here, and when I was talking to Tom last night, I mentioned the Dow had the same thing. It had that long-term falling axe, lower highs, much lower lows, straight line, diagonal line, that is. And now you've got the same thing. I said, if we break above it, and what I said to subscribers, be prepared that if we take out 15,593.91, the high of the 30th, that's yesterday, that there's a really good chance you're going to go right towards and then just above the high of the 23rd, which is at 15,604.22. So where have we gone to today? The high is 15,634. So that has accomplished a bunch of things. But number one is you've got the MACD flattening out with the 9-period moving average, but it's still lower than it was back at peak E. And you've got the stochastic just barely acknowledging, because the day is young, not even 2 hours into the day, barely acknowledging this upturn, very strong candle. but it's at 80%. Yesterday it was just a tad under 80%. That says to me that the coming 3 days are going to be really, really important. Let me just say that again. Really, really important. I'll get into just the whys and the wherefores in a moment. What I also wanted to say is that I've made a huge fuss for years now about the way I read the VIX index, the volatility index. Evidently, it's quite different to a lot of the traditional ways. I mean, I haven't gone into all the different ways. I just know that I've looked at it differently and for a different reason. I look at it in terms of parameters that I've looked at for years and years and years, and that says to me that peak E in the 120-minute chart hasn't dropped very significantly. It's at 13.48. It's up 0.09, and that tells me that we could see kind of a rotational aspect that's continuing to go on, that in fact the VIX is not about to go down to the 12.07 low, and that it's making higher highs and higher lows and consolidating at each level in the 120-minute chart. If we look at, and this is leg C up in the 120-minute chart of both the S&P and in the Dow, which says there could be a pullback and then one more nominal high, right? If I look at the let me just do this right now. If I look at the VIX, didn't quite finish with the E-minis, but I'll be back. The VIX is making a peak A if there's no new high above 14.14 today, but it's held beautifully in that Eiffel Tower failure, the A pattern that I've discussed and shown here, and it's gone to a lower low below 12.26, but it didn't close at 12.29. The close of the 22nd, it hasn't closed underneath 12.26, and that is a positive so far in the daily, not the weekly. The weekly looks terrible, the monthly looks even worse, but you always start in the shorter time frame to impact, to influence, to nudge the larger time frame. Okay, now let's go back to that E-mini because it's very important, because it says there's still room to go in the Chapman wave if we are to get those traditional moves to the upside that take in a leg D. So let's go to this, and it says that if I'm going to be ahead of the game by calling it C rather than D, a move to the upside above 16.7975, 1695.75 would be very important, because it would say, finally, you've got your leg D, and then we've got to look at the 120-minute chart, which in fact isn't a leg D. We've got to look at a whole bunch of things to say, we're getting closer, but I have to get those cues in line. I would like to have everything in line. Actually, you could start a move down, because the Dow could turn out to be weaker than the S&P. The S&P could be weaker than the Qs, etc. Now, let's just for a moment jump to the NYA, because that's very important. It's a 2,000 stocks, but it has a lot of the bank stocks, so that's been kind of lagging. Now, the NYA, the New York Stock Exchange, this is really important. Why? Because it has been behind, and all it needed to do was to go 1 penny above 96.95.46 to start leg D in the monthly. And I'm going to be calling it, well, it depends when it happens. If it happens this week, it'll be a G/A in the weekly chart. But what's really important is that the daily chart says that if it had to spike that high, it would really have to do a lot to get the stochastic above 80%. But that MACD could still deflect. That's that dolphin pattern. It could still deflect higher, and that'll be important. So far, it's acting okay. It's up 41.96 at 0.44%. Dow's up 0.53, and the S&P's up 0.53. So they're all in kind of concert over there. Okay. Now, this is very important. Gold has been holding very, very well up until now. It's down 15 at this particular point, at 1308.30. And that's at a peak D, and you've got to expect that it's going to be pulling back a little bit. Why? It's had a spectacular move from the 1179 level to the 1148 in terms of Sure, that was the wrong word to use, spectacular move. It's had a very nice percentage move, but at the same time, it has not been a V-shaped pattern in the daily, but it has been close to that in the weekly. Friday's close is going to be very important. The close needs to be very close to the high of last week of 1348.70 on the contract. And that contract is the August contract. So let me just go through that. Just briefly in terms of the GLD, because a lot of you look at the GLD. GLD is at 126.52, made a peak D as well. That's the same thing. So the GLD needs to close. I would say it has to close above 128.78. It's at 126.50 right now to say, hey, I've really started a move that could be a move of time. I don't know if it'll be a move of significance in the points because it's had such a fantastic crescendo to the downside. That's just one of the spectacular moves in gold has been from 170 and the GLD from 174 down to the 114 level, 60 points in just the shortest period of time. So that's the gold, and we'll be back to some of those other things in a little while. I want to look at the TLT. Why? Because in the TLT, this is the 20-year Lehman T-bond fund, we've made a new 52-week low. More than that. There, let's call it a 52-week low. And what is it doing? It's testing the left side, which I had drawn in as really important support at 106.08. It's already at 106.17. It's gone down to 105.85. It's made a lower low. I'm going to be watching this. This is leg G to the downside, but it could be G/B. Wow. So if there's going to be a turn in the market to the downside over the coming 3, maybe 4 sessions, I want to see if this time the TLT is able to rebound and really have a sustained move above. It's a 106 right now. First of all, above a 108.50. But absolutely, there's no question that unless the TLT is able to climb and hold above 109.69, let's call it 110 in the next 3 weeks, bonds are just, they're done. That's all I can say. They don't have to go down that much further from here in this particular time frame, but they're going to have a tough time. So I think I've covered almost everything I wanted to look at. I haven't discussed the dollar, but I'll do that right now. Dollar was kind of stuck at that 9-period moving average, trying to get above 82.05. It's tried today, sort of failing. We'll see what happens. It's trading right at 81.99. I've got it at 81.88, so it's 10 cents higher. Yeah, this is leg A, but it's in a counter trend move, and the weekly chart says, you know, boy, it better get going, because if the dollar takes out 81.30, closes on 81.30, it's a good chance it's going to test the 80.50 area. So it really needs to get going on the upside. We'll be back with Rick from British Columbia straight after this message. Hey, Rick, what did you want to look at?
The SLV or the silver contract, whatever.
Great. Okay, we'll be back with Rick, Peak D, and the SLV, and we'll see where it's going to stop. We'll talk about that in a moment. Be back with Rick. Dow's up 83, S&P's up 9. S&P's holding up better than the Dow. I'll be right back after these very important messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I'm just trying to find something. There it is. Okay. So what we're looking at right now is the Dow is up 82, S&P's up 9.23, and we've got a couple of calls, we've got a couple of questions, and then a couple of emails to go through. So let's go right to Rick in British Columbia, who asked about SLV, and SLV, folks, is, in fact, the iShares Silver Trust. Now, what I'm going to do is this. I'm going to just move that away for a second. I want to show that from the low bar of $17.75, on the 27th of June, what did you get? You got a peak A, a peak B, a higher peak C. You got a peak D on the 22nd of July at 19.89, and now it's pulled back. There are two fighting patterns that I often talk about. And this pattern here, let me just make that, I'm going to make it purple or pink right now, just so that it stands out quite clearly. There's the up channel that it was in, which is also part of the falling axe pattern that I talk about, the inverted falling axe. And there is the arch formation. And both of them often vie with one another for leadership coming off a bottom. Now, what's really important about this, it's broken the support of the up channel. That's in the daily chart. Let me just make this a little bit bigger. And what we're looking at is I haven't yet been able to put a down arrow. It was very interesting at that peak D, even though it's broken support, it's broken a whole bunch of things, and the stochastic down to 47%. Why? Because the fast moving average of the MACD, which I have incredible respect for, because it's at look back strength, that's the way I look at it, says that until I cross negative, you might see a pullback. You could, in fact, turn in later on. You could turn into a sell signal to sell mode. But at this particular point, I'm still looking at internal strength. So now internal strength on the MACD says fine. But it also says that if SLV was to close under 18.58, all of a sudden the weekly chart changes from WEEK to WEAK, because that 9-period moving average that silver has not been able to close above since it broke down. This is amazing. Since the 15th of February of this year, where it was up at the 30.13 area, plunging down to the 17.75 low. That's it got cut in half. This is the most pathetic bounce, really. When I say pathetic, I mean absolutely pathetic. Why? Oh, that's not an A. I think that's a B. Let me just change that. Yep, absolutely. This is actually leg B, possibly peak B, and all it's done is it's come off 17.75, and it's gone to, I don't believe it, it's gone to right on the 9-period moving averages. This is at 1989. And the monthly chart has got a doji candle with a fractionally higher low bar. So in the end, going into the middle of August, this could turn out, if there is no test of 1774, 1 penny below 1775 low, but in fact there is a move to the 19.90 area in August. That's going to be very much better, because it will say a slow grind to the upside. There's no real change in silver in terms of the monthly chart, but some kind of counter trend bounce is unfolding. Now I'm going to just add one little thing. The MACD and stochastic and the daily are a little bit in conflict because the price is going with the stochastic and not the MACD, number one. Number two is that the weekly chart, stochastic, has gone off the bottom from about 9%, I think it was, no, 5% to where it is now at 17.62%, but it hasn't been reflected very much in the price. The price really should be, actually, with that kind of move, it should be up in the 1960 to 20 area, number one. Number two is that 9-period moving average, that black line that you can see, this is the middle chart here, the weekly chart, that resistance has to be taken out. So that's the analysis of it right now. Looking out, Rick, I'm going to ask you a question, but I'm just going to finish it with a statement saying, if for whatever reason the dollar, which is trading right now at 81, around about 81.80 to 81.90, if the dollar cannot rally, and if the dollar cannot get into the 82.30 to 82.50 area, that's going to allow gold to move up gently to the upside. I should test the euro and the currency and the euro-dollar currency pair. So I've just spent a whole bunch of time giving the analysis of what I'm looking at. Now I'm going to ask you, Rick, when we get back, what are you looking at and what are you doing? I'll be right back with Rick from British Columbia. Dow's up 66, S&P's up 7.60 as we go to the waiting mode till 2 p.m.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's struggling. It's up 68. S&P's up 8, giving back a lot of the gains as we go into the wait and watch period. I said to my subscribers, be careful. We could have a rally for that rogue wave to the upside. Then you got to be careful at the close because we could have a slide down the S&P. The Q is a little bit different chart pattern. We are on right now with Rick from British Columbia. We're looking at silver. Rick, what's the story?
Well, you mentioned SLV going to peak D. Is that correct?
Correct.
Okay.
The continuous contract has not. It went to the C.
No, I was just going to say that. The silver contract is at peak C.
Because you remember that the silver contract, I thought I had the SI. Oh, well, I went to the U contract.
Yeah, it is the U still.
Yes.
Gold is changed to the Z December, by the way, just over the last couple of days.
Oh, it has. Okay.
That's amazing, but now we don't have to deal with other contracts for about 3 or 4 months. That's
Thank goodness. Okay, well, I'll change over to the Z. They're pretty close, I'm sure. Okay.
But I do, how do I say this? On a weekly, there's volume down there technically at the lows, and we're doing a doji right now on a monthly, which could be a halfway move down from the previous month.
Ugh.
So I think we're going lower, and I do think I'm in Tom's camp. I don't know about the dollar going to 89, but I think we're due for a rally in the dollar.
Well, let's
over
just
time.
Have a quick,
that doesn't mean it's going to happen right away.
Rick, let's just look at the euro. The euro, I keep getting emails and questions about the euro. The euro-dollar currency pair is making peak C as we speak because it needs to go above 1.33010 by 1 penny to continue leg C. It could do it by the end of the day. But the MACD and stochastic are really strong, and it's walking the 9-period moving average. So I see there's a good chance that the euro will go above 1.34153, the high of the 21st week of the 21st of June, for a leg D and stall underneath the previous high of 1.37 way back in February of this year. And that'll also be leg and that will struggle to make that leg C up in the monthly chart, and it can make yet another arch formation, and that would allow the dollar. And I'm going to show you a chart right now. This chart here is of the UUP, which made a peak E at 22.98 in the weekly chart. The Power Shares DB US dollar bull. My engineer is going to love this because he loves black background charts because the highlights so nicely. And the S&P is in leg F/A, calling it at this particular point. I have to call it F to be more conservative. A is very bullish. F is not very bullish at all, but that's the way it is. And the TLT is going to lower lows. It's actually in trough. It's in leg G/B right now. It could be C, but it's in leg G, at least on the downside. So when you look at these charts, you say, wait a minute, the dollar is just stuck in this range. It's not really doing anything. And until the dollar, I've said this for a long time, until the UUP, that's the Power Shares DB US dollar bull. I love the way they call it the dollar bull. It's been anything but the dollar bull. Anyway, until they can break into the 2350s, really slice through the 22's resistance and hold in the 2350s or higher, it's just in this trading range, and the Fed is still determined. I know, I can feel it. They're knocking it down just as they're doing their very best. Now look at this chart here of the bond. The bond yields have gone to leg C in the weekly chart, leg C. But if you look at historically, it's just back in the mid-range of where it's been for the last 3 years. 5 years. And there's a divergence. Now, this to me is absolutely critical, and this is going to be a market mover between the VIX and the discrepancy between the 5-year, which is failing to make even leg B, and the 10-year, which is not yet even at leg C. It's close. There's a divergence because the 30-year is going up quicker. And that's something I'm really watching really closely. So now let's just put this together with silver. Silver is the weak link between the gold and out of the two metals. It just hasn't participated as well. The euro should have a little bit more currency to the upside, pun intended. And the GLD, which is pulling back, I suspect is going to hold. It's just filling the gap, and it's going to hold round about 125 to 124. That's my thinking right now, based on the MACD and the stochastic. Now I'm wrong if the GLD takes out 122.73, closes underneath that. So let me just run this again. The euro dollar currency pair still has to go to leg D. I think that's a positive. The Qs and the QQQ series is in leg C and has to go to D. The E mini contract still needs to go to leg D. There's a divergence. The Dow and the S&P have pretty much completed what they need to do. I'm becoming way more cautious at this particular time. That's the other thing. Now, if you put this together, and I know you'll have to look at the whole picture. Let's just add the NYA for a moment. I spoke about it a moment ago. Let me just show what I'm looking at. The stochastic is down at 70%. That's not good, but the price is holding. There's a chance for one more spike for leg D, but I suspect it doesn't have to be now in the NYSE because it has so many more bank stocks, and that's really what's impacting it. I would love for the market to have a really sharp pullback in August, a very sharp pullback. I'm talking double-digit percentage pullback. I'd love for that to happen, and the NYA failed to make it, which confirms for me that later in the year we'll be going even higher. And then you'll get your leg D in the NYA. So I'm just trying to put that together. So if you're looking at the dollar I think still has the Fed working against it. I think bonds, and that includes the TYX yield, they're doing their very best, but it's still within that trading range that I just showed moments ago. It's still within the trading range it's been in for 5 years. So it's not a big deal yet. And if I add one more chart, this will be a surprise to some of you, which is the iShares Global Timber and Forestry ETF, made a peak D in the weekly. It's working really hard. It looks to me like that's going to be a failure pattern. It's going to be an H pattern, and that it's going to, if it breaks the low of 43.86, it's going to go right down to 41.90, that moving average there. And you've got a peak F in the weekly chart of the home builders, and they are the Philadelphia. That's not a good sign. I'm becoming very cautious here. I've got stocks that we've had a very great percentage gains on, like a Hertz Global, which we're out of now. It's making some kind of a top here. I mentioned to my subscribers this morning, CAR, which is Avis, is making also some. It's really struggling to make the new highs now. And the other one, which would be, so we've got CAR. Let's see, that's CAR. Oh, the other one is Alamo, which is ALG. Same sort of thing. Nice rebounds today in all of them. But it looks to me like they might have made their tops. And I'll be looking at the RTH. Now, the RTH made a peak E in the daily. It's an F/P in the weekly. And it's leg C in the monthly. And that kind of concurs with the New York Stock Exchange saying, hey, you can have a sharp pullback and then go on to your leg Ds. I'm just trying to give you the perspective. So I think silver, your question is silver. Silver's the weaker one out of the gold and the silver. Silver, SLV, until the SLV is able to, it's even lower now. Until the SLV is able to decisively close, it's at 1875, it's the iShares Silver Trust, right into the 1980s to make another leg up. But to go peak A, peak B, and hit by the 9-period moving average 2 points off the low after coming down from 48.35. Wow, that is just tremendous internal weakness. So I hope that helps you.
Yeah, you bet. Thank you.
Thank you. I didn't give him much chance to speak, but it gave me a chance to do my overview in a very precise and concise way. So thank you, Rick, for giving me the opportunity. I hope that helps. So, hey, folks, this is what I want you to do. I wanted to talk about... I got to talk about these TrendsWatch things because now they are becoming. When anybody ever read Hayward Broun, I think his name was Hayward Broun, he was this commentator back in the 20s and 30s, and then he had a radio show, and he was kind of faded because he was the old school. But I used to have a book. I used to love reading about him, about his thoughts. And if you go back to the 1920s and 30s, the way he spoke about just the same things that are happening now. Women were buying automobiles. Women were doing the crazy stuff. You got Amelia Earhart going for the longest trip on a little bit of an airplane that nobody even, who flew in airplanes, right? And here's this woman who goes across the world. There are so many parallels with this period of excessivity that are going on now. So I'm not talking about this coming decline that I suspect we're very close to in the market. I'm talking about the big one that's coming. And I think that big one's coming later on, and it could even stretch into 2014. I don't know yet. I'm piecing all these little puzzle parts together. And it's coming up, and it says, real estate, watch out. Stock market, watch out. But we're not there. There's not there. You go to, when I haven't done it for a while because it's the summertime, but the last time I went to my club, tennis club, in 2000, I could even play. I could be playing and I could see one of the monitors with a stock market ticker. When I walk around now, you're lucky to find one ticker, and it could even be CNN with just a little thing on the right. CNBC isn't even on. We have not gotten there, that phase, and I believe we will get to that phase. Copper. Oh, I got questions I got to go through. What am I wasting time for? Copper, right now, copper's at a very nice bounce. This is going to be an absolutely imperative area for copper to hold. There's that H that goes to an M pattern. Let me just draw it in here. The other one wasn't because it was much sharper rising highs than when I looked at silver. Copper has got the H that goes to an M with a successful test so far of not breaking underneath. This is the continuous contract, the 3.076 low. Yakety yak, got to have a drink there of something. Of June the 25th. But it's only sideways. It hasn't done very much. So I'm just going to say on the downside, if copper at any point goes to 2.9 or lower, that's going to be talking about worldwide weakness in copper demand. I don't like that. You remember how I got so positive about 3 summers ago, when I said copper is working so well? This is the opposite. It's been very poor. But there's a chance it could have a bounce. It's almost like the silver chart in a way. So I'm watching copper real closely, because you want to see 3.14, 3.18, and then a brand new recovery high above 3.2, let's call it 3.24. No, that's what I would like. I don't know if it's going to happen. That's number one. Now, I had questions here. Just first of all, DDD. DDD is one of those 3D systems. It's called 3D Systems Corporation. 51.94. This is for S&P in the DAN. If you look at that high, 51.94, it almost got there on the rebound. I think that was an earnings rebound. But the pattern we're looking at here says high-level consolidation. I'm just going to, I don't know, I should ask you, are you long, are you short, what are you doing? All I can say is that between DDD in this rectangle formation, which I identified a little while ago, I drew it in over there, until it breaks above 52.50 and holds. I think it's just stuck in this pattern. I'm watching real closely, because if it breaks under 45.20, look at SSYS, which is also a 3D company. I never remember the name. SSYS. I remember the symbol, as always. It's a symbol that counts. Stratasys Limited. This is in leg G/C in the monthly chart. I'm giving the benefit of the doubt. I'm saying it's probably in C. It's in an area that's in great demand, 3D systems, although I know that they're very expensive for the ones that really do the job that you want. It's made a peak in the weekly, and the technicals are kind of shaky. I don't think there's very much upside at all in these stocks. Now, I think there was another one, XONE, if I remember correctly. I remember Dave White talking about it a while ago. I put it on my list of stocks to watch. It's gone to a peak D in the weekly. It's only leg A up in the monthly, so this is one to watch for the future. Short term, I think it's going to make the H2M pattern, unless it can, XONE, the X1 company at 62.04, unless it can break above 60, let's call it 67. I think it's just stuck, and my guess is going to retest the low of 59.15 and then go all the way back down for a big test of 55.50. So I think these guys are stuck. They've had a fantastic move. They're digesting. That's that. Okay, that was for S&P in the DAN. Rob, in the DAN, we also got to silver. Jim wanted to know about the DIA 120-minute chart. So the DIA, which is the Dow, this is the Spider Dow Jones Industrial Average ETF. Now, this is very interesting. He made a peak E in the 120-minute chart at 155.74, and then it tried to go high. It went to 155.67, 155.70. It couldn't get there, and then today it went peak A, B, C. So this is leg C right now, and that's saying to me, if the 120-minute chart is way weaker in the sense that it's only a 120-minute chart, it's an intraday type chart, I would be prefer to look at the daily, which is in leg E. And leg E says, if you're in leg E, you've got to, in the Chapman wave, be somewhat cautious. Yes, the whole thing can recycle, but this is that moment that says there is no other technique that you can use that gives you the same kind of lettering and pattern formation and identification key, just to say, hey, this is where you've got to be a bit careful. That's where it flashes the yellow light, but all you got to do is make your stops real tight. I'll be right back. Dow's up 67, S&P's up 7.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Let me just go run a couple of things down because we're going to run out of time. We've got Larry Pesavento coming up. Fabulous program. I'm really looking forward to what Larry's going to say because the markets are, we're at an inflection point. That's my belief right now. It's a very important moment. So let's look at this. This is the pattern of the Dow Dimes that I show my subscribers every morning, and I discuss it in great detail besides all the other stuff that we go through. This is the 120-minute chart. There's a cup formation that is usually not that positive. It's like inverted with a handle and cup. It's not the cup and handle, but handle and cup, but a rather long handle. That very often it can break to the upside, but it has a tremendous amount of energy that is being usurped by taking that amount of time and just not being able to follow through. I like speed. In a bull market, you want speed to the upside. In a bear market, you want speed to the downside. That's why we haven't had the bad news yet that should be coming for a sustained move to the downside. Yes, you can go down after very, very good news, and we've had a lot of good news. So this is going to be a very important moment if we start going down and then the bad news comes in. But you won't sustain a move to the downside until there's bad news. Now, the MACD turned positive in the diamonds, so you got a nice move to the upside. That was complementary with the technicals. You got the stochastic, it's only at 69. That's saying, hey, at this point, I don't have enough strength. So I'm watching this really closely because the high today is at 156.03. This could be called at peak F. I'm calling it peak C for right now. This could be an extension of that last peak E. I'm calling it C for now because I think there's just enough residual strength to have another flyby with some brute force to the upside and then it won't hold. But if you take out the 15,620 to 30 area resistance in the Dow decisively at the end of the day today or tomorrow, I have to consider there's a chance for a recycle to the upside. I'm not afraid to admit that. I just don't see it at this particular point. Now let me go back to what I was talking about. The question of the Dow, so the Dow Diamonds I think has a little more upside potential, but there isn't follow-through strength just yet in the stochastic, and that says to me, watch out real closely. If you look at the USD JPY, that's the US dollar Japanese yen currency pair, it made that pattern that I was talking about, that pattern that could be replicated in the weekly chart. That is, that it could go to an H formation. I love when it comes there. It looks just like an H. I even drew it in here, right there. There's that H pattern. It comes down, breaks the left side low. It's a lowercase h, looks like a chair, actually. And that's which I'm going to be watching closely. Now, let's just run this again. Just real quickly, I had a question about the GLD. Someone might have missed it. GLD should hold between 125 and 124. That's my anticipation. I don't know if it will, but that's because the MACD is still very strong. Stochastic's okay. Silver's weaker. Okay, I want you to get that out of the way. Okay, now the stuff that I need to look at. The volatility. I'm going to make this just as simple as possible. Until the volatility can climb into the 15s and hold, go above 1524, the 200-period moving average, and hold there, it is imperative to keep an eye on that. The technicals are suggesting it can do that in the daily. The MACD's cross positive. The stochastic's at 44%, still low, but it's moving with the price. But that doesn't mean to say it's going to do that. I can just tell you this. If the VIX, Volatility Index, remains in the 13s or lower, I don't think it's going to break 1207. But if it remains lower, there is upside potential, and that potential could be actually quite quick and sharp as short covering comes in. If the volatility by the end of the day breaks above 1414, especially 14.55, be careful. I think we've set in place one by one the different indexes to start turning down. We're going to be watching that real closely, and the Qs will just have one more leg to the upside if they need to fulfill that. Oh, I forgot to look at the Comp Index. I'll do this as we're closing out. Compex, yeah, is also in leg C. So there's still internal strength, and we're going to be watching that. Hey, folks, thank you for being here. My service is the opening call. Check it out, front page of TFNN, 2 weeks free. Very comprehensive look at the markets, plus our stock picks. I'll be back tomorrow. Have a great afternoon.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.